Good morning, everybody. Just trying to get everybody up on stage here. Can I get a thumbs up if you can hear me okay? Awesome. Yeah, so just give us just one quick second while we get the remaining speakers up, and we'll get this thing going.
Hello everyone. Hi guys. Please request to speak if you would like to join us, of course. That will be very good. We've got Kevin on. We've got Pipe on. Right, very good. Getting there.
All right, I think we just about got everybody here ready to go. So let's get started. My name is Cody. I'm the Chief Experience Officer here at Layer 1X. Sounds like we're having an echo. Give me one sec, guys. All right, can you still hear me okay?
Yep.
All right, perfect. Sorry about that. Little technical difficulties happening, so I appreciate you guys' patience. Yeah, as I was saying, my name is Cody. I'm the Chief Experience Officer here at Layer 1X. We're excited to have you here listening to, I believe this is episode 37 of X Talks, and we're going to be talking about DePIN and real world infrastructure and how that applies to DePIN today. So looks like we've got a pretty good panelist lined up for us. So before I kind of introduce them, want to introduce who we have with us today. We've got Sam, who is one of our community mods here. Likewise, we've got Inna joining us from the X Talks handle. They couldn't do it without her, so she's the one that puts together all these amazing spaces. So thanks to those two. Glad to have them with us. And so with that being said, let's kind of jump into getting our panelists introduced. So if you want to take a quick 30-second elevator pitch, give us your rundown, tell us a little bit about you, what you're working on, and go from there. So feel free to just jump in whenever, and we'll kind of keep things casual. Who wants to go first?
I'll go first if you don't mind.
Perfect.
Hi, so I'm Batsi Muguti, representing the Pipe GDAO behind the account. I'm the founder and lead DAO contributor at the Pipe GDAO. and we are a refi ecosystem which is focused on real world impact projects. So we are all about generating finance capital from Web3 to then invest into real world impact projects. And the first project that we are going to be regeneratively financing is the Pipe Company, right? And the Pipe Company, uh, they're our real world impact, real world asset partner, and they're all about university IP and innovation. And I'll, of course, Rob, the Pipe Company CEO behind the Pipe account, so he can expand on that further. But that's who we are. And that's what we do. Thanks.
Yeah, hi. Shall I follow up on that? If you can hear me.
Yeah, please do.
Yeah, so the PIPE is an acronym for the Pre-IPO Exchange, and this was set up some time ago. 2012 was when I first started working with universities and developed the software in 2017, started building software in 2020. Platform exists, and back between 2017 and 2020, I was looking at the tokenization space, partly for the reason that most people do, which is to raise money for a project. But actually, I felt, and the team felt at the time, that raising an ICO or something like that just to put money into a project wasn't the right way to do these things for us. So we built the platform out using our own funds, and we raised some money once we'd done that from a VC to prove minimum viable product, engaged universities, started doing what we say we can do to prove first principles. And then when we were looking at the funding mechanism for projects, we got offered a lot of money by the European Investment Bank and angel investors and things like that, but we just didn't like the model. We didn't like the way that it worked, the fee structures, the costs, the regulatory frameworks, and all of this kind of thing. So we then looked at how would we raise funds in a different kind of way, and that's when we discovered the idea of a DAO. And we've been investigating that for quite some time. I then met up with Batsy, and we floated the idea. And since then, we've been working together with Batsy's group to develop the parallel activity, which is the DAO, the GDAO, PGF. And so the two things come together really, really well. We're the real world Web2 platform where researchers from around Europe can post projects, and they work through our due diligence and qualification process known as QED, which is an extensive stage-gated system. And on the back of that is the investment fund. So it means that everybody can benefit from being involved in these really smart, early stage, highly interesting academic research-led projects. And we think it's a really exciting space. And so do a lot of people, actually. A lot of universities are very keen on this, and a lot of VCs are keen on it. But anyway, that's what we're all about. So yeah.
Perfect. Thanks for sharing. Looks like we have a couple of new people join. Go ahead and just take 30 seconds and introduce yourself. That would be great.
All right, I'll go ahead and go. Can you all hear me okay?
Yep, go for it.
Hi. So I'm Mascot. I'm the team manager over at Spirit Swap, a decentralized exchange on the Phantom network. Hopefully everybody's familiar with Phantom and the work they've done in the past and the Sonic upgrades that are coming this spring and summer. Hopefully become the fastest network in the market. So we're really excited for that. We're really excited to have been in talks with Layer 1X for a while about integrating them into our platform and helping them or having them help us reach all of our bridging goals as we want to go multi-chain in Q2. So really excited to be a part of this conversation today because, DePIN, obviously with all of its, real world application is still really just, locked in on a blockchain level of being able to have that financial backing of crypto and the decentralization that inherently comes with the product. And so we're very excited to see that grow from an exchange standpoint, to be able to service our users and those products so that, projects like the other people that are presenting here, like Pipe and everything, can best get their products and their investment opportunities in front of users in the crypto space. So we're really excited to be able to partner with everyone and be able to build opportunities like that for the space as a whole, and really sort of set the stage for this next couple months. That's going to see crypto, I think, really hit all-time new strides in as far as reaching real-world utility and everything. And I think that really quality decentralized exchanges, not to toot our own horn, is definitely going to help facilitate that, because we're, a good exchange is the bridge between, DePIN products and users like you and me and the everyday Joe getting involved in those projects.
100%. Love it. Thanks. Looks like we've got Kevin. You were trying to speak a little bit earlier.
Yeah, hey everyone. My name is Kevin Unai, and I'm the founder and CEO of RWA.Inc. We are a real world asset tokenization and investment ecosystem, and we also fund DePIN projects. So we are very excited to be here today and tell you all about us and how we think, and hopefully answer a lot of questions and have some great discussions.
Great. Welcome. Ultra, do you want to take 30 seconds and introduce yourself?
Sure. It's Alltrade, and I'm Dan, the founder of Alltrade. I'm coming in a little bit late to the party here, to the space, but in just a few words, Alltrade is bringing trading 3.0 to the market with native exchange technology. It's bridgeless cross-chain order books that enable trading natively on dozens of chains with no bridging, no MEV attacks, no gas trading cost, etc., and all with real order books, limit orders, etc. But Alltrade is built as a white label SaaS type of platform that enables everyone to launch their own. Oh, Alexa, quiet. Sorry about that. Have another meeting starting in a few minutes. A white label SaaS platform that enables anyone to launch their own exchange inside their own brand and provide trading services to their own users, set their own trading fees, etc. And not only that, and here's where it becomes interesting for so many projects out there, they can actually self-list their own tokens for trading on the order book across multiple chains, and enable their users to trade directly, buy and trade their own token directly, rather than have to go or be reliant upon only on centralized exchanges or third parties. And the beautiful thing about it is that it all works as a network of shared liquidity, and so you can gain co-listings from other partners, and your users are trading together in the same order books, the same liquidity, etc. And this really, enables projects to maintain ownership of their own, trading their own tokens, their community, keep them inside the brand rather than sending them to third parties. And for various real world assets and infrastructures, I think this is especially interesting because, for example, RWA tokenizers, for argument's sake, often have more than one token, and listing it in, centralized exchanges is, it's a very big challenge. So this is definitely a solution that solves a lot of pain points for projects in the market.
No, that's powerful stuff. So I apologize. My brain is kind of it's just starting up. It's kind of early here for me, so I apologize on that, Alltrade, for mispronouncing your name there. Al, I think if you can hear me, do you want to take a second and introduce yourself?
Hey folks, yeah, Al from Koi. Always great to see Layer Zero. It's awesome to see projects make it through the bear. We also were in the last cycle and building really consistently, and it's just kind of it's good to see how the market comes together. Koi, in a couple short words, is a solution to a problem I saw back in 2016, which was, when you first got into crypto, buying your first tokens is the hard part. For a lot of people, there's a big emotional barrier there. It's like, what am I doing? I'm sending my money to some website, and now I'm getting back some imaginary internet money that I hold in an app on my phone. Like, what is this stuff? And what we solved is we created this giant DeepIn network. So anybody with a computer can install our app, the Koi app, and it allows you to mine DeepIn tokens on your home computer. So it's incredibly easy to use. My 90-year-old grandmother took like 5 minutes to set it up. And it turns your computer into a part of Web3. Basically, you're able to host applications for other people, do data mining tasks, provide like all kinds of storage type stuff, similar to Filecoin. But the cool thing is, in a couple of weeks, we're launching our mainnet, and then the token will be listed. And after that, you can start mining all these other altcoins on top of Koi. So actually, even a few of them launching on testnet right now, and you'll be able to mine all of these from your home computer, which is pretty cool. So. Yeah, excited to see what Layer Zero is up to as well, and see if there's a way that we can kind of integrate long term and get more of these DeepIn tokens circulating. It seems like the next layer of the ecosystem.
Perfect. Sounds great. Thanks, everybody. Definitely sounds like we've got a pretty good panelist selection for today's topic. Just to let you know a little bit about Layer 1. Layer 1X is a Layer 1 blockchain. We are fully decentralized and fully interoperable, meaning that we use bridgeless technology and we can connect with EVM and non-EVM chains. Our goal is to unite all projects, all chains, and all users across Web3 to kind of build that utopia type of vision that we all have for Web3. So XTalks is a platform that is sponsored by Layer 1X. This platform basically allows projects like yourself, as well as other projects across multiple chains, to come on and basically share their expertise, share their programs, protocols that they're working on, projects, and as well as kind of just engage and network out. And so we're excited to have you guys all here today. And with that, let's jump into today's topic, which is DeepIn and the real world infrastructure. So we all know that the world we live in is pretty vast, and there's lots of invisible systems of infrastructure. But in today's topic, we want to kind of spin that a little bit and ask the question of, what if these centralized networks were reimagined onto the blockchain, owned collectively and operated transparently? And that's basically the promise of what DeepIns are. This isn't just about the tech upgrades. It's about questioning power structures, unlocking new economic models, and maybe even changing the way we understand ownership itself. So with that, let me just kick off the first question. So since DeepIns pretty much blur the line between physical and digital, when our world is mediated through a decentralized infrastructure network, what does that really mean to own something?
John, I can
go for it.
Have a go if you want.
Yeah, go for it.
Okay, so the way I see it, the way we see it, is that everything is going to be tokenized one day, right? Your TV is going to be an NFT on the blockchain. Your car, everything is going to be on the blockchain. So for us, it's about, this is where mass adoption is going to happen, right? Because in terms of actually proving out the use case, the technology. So I'll give you another example. CBDC, central bank digital currencies, fiat currency, programmable money. Blockchain is the technology that's going to be used for that use case. Okay, and then when it comes to other assets, once they've proved that on CBDCs and stablecoins, because stablecoins are also DePIN, really. Yeah, stablecoins are bring US dollars onto the blockchain and are giving access to people to US dollars in the global south. So that is kind of DePIN already. So in terms of decentralized infrastructure, everything which is currently off-chain, whether it's software or hardware, I think DePIN should also extend to software products that actually do things in the real world, ERP systems, production software, all those kind of things. So I think DePIN will extend from Web 3 to Web 2 to tokenize and record everything that exists onto the blockchain. So there's probably going to have to be a Web 2 layer which connects to all the real world or all these soft, the hard assets or the software assets. So this is how I see DePIN evolving. It's not just about, connecting to a physical piece of infrastructure and getting tokens for sending data. I think it extends to a whole lot more than that, connecting Web 2, the real world, and Web 3.
And I'll just add something to that, if you can hear me okay. It's a bit of a paradox, really, because there's already case study, well-proven models for this. I mean, if you have a mortgage on your house, you don't actually own your house. If you've got a lease on your car, you don't own your car. At least in our space, when you're talking about tokenization of real-world assets, we're advocating a system that allows us to have an audit and have a ledger of your ownership, which doesn't exist actually in the real world. So it's a stronger ownership model. And I think we need to sort of recognize that even though it's intangible, it's stronger. Whereas the tangible stuff that people think they own, they don't actually own. So that's the paradox. I think it's about messaging more than technical requirements. I think we just need to create the right kind of language, if that makes sense.
It sure does, 100%. So let me just kind of follow that up with maybe something that you brought up, a stronger form of ownership. I like how you presented that. So, if we shift away from kind of more of the material possessions and maybe more so towards owning access rights or, those participation tokens in those resources we need, you kind of touched upon leading a fundamental different shift, I guess you could say, in economic and social kind of experience there. Can you dive in a little bit more what you're kind of thinking there as well?
Yeah, I guess my experience of this problem goes back quite a long way, actually. Many years ago, I ran a business that was rightly or wrongly scraping data. So we were, I'm talking more than 20 years ago, maybe. We were taking information off the internet, for want of a better phrase, in the form of news. So what we were doing, we had a piece of technology that would go out. It would find places online where information resided. We would harvest that, and then we would scrape it every day. And we'd bring that back into a database. We'd make sense of it, and we would send people a feed. So if you were interested in, a particular sport or a particular set of politics or whatever, you could set these things as your markers. And instead of going out and searching for stuff, you got stuff sent to you every time the data was updated. So if you're tracking a company and somebody in the company said something, you would get an alert that had been said. And this was quite way ahead of its time. But we actually fell into a legal dispute around with I can't remember the name of the organisation now, a large news organisation, and they cited a piece of legislation in the European Courts of Justice, which was it's known as the William Hill versus the British Horse Racing Board. But the point I'm trying to make was that was all about ownership of data. So, for example, my argument in court was, if I buy a newspaper and I've paid $1 for a newspaper, and I read it on the train, and then I leave it on the train, and somebody else picks it up and reads it, are they then eligible to pay again for that? And if they leave it and somebody else reads it, and multiple people read that newspaper, the news corporation aren't making multiples of $1. They've made $1, but loads of people are reading it. So the question then was around how do you measure that kind of ownership? That didn't exist. We couldn't do that back then. Now, with sort of a DLT or an NFT or some form of soul-based token or some form of a mechanism that's built into a contract, you can have the ownership of your information and your data, and you can prove that it's yours because it's actually in a distributed environment. So your network can prove that what you think you own, you own. Now, this has only become pretty. This has only become relevant in the last few years with the advent of these new technologies. So I don't have the answers. But what I'm saying is that the messaging should be, we've lived in this environment where big corporations can tell us what we can own and what we can't own, what we do own, what we don't own. And we believe we own our house. We believe we own our car, but we don't. We just got to try and work on that messaging, I think. And how we do that, I haven't, apart from that coming into my head a few minutes ago, I haven't actually thought in detail about what that actually means in terms of messaging. But I can certainly, I can certainly put some thought into it.
Well, that's what these questions are designed to do, is to kind of get you off the cuff a little bit and kind of catch you off guard here, and so that we can kind of get your guys' feedback and knowledge on things. So thanks for sharing that. Does anybody else want to weigh in on that question?
Is it an awkward silence moment, or we can't just hear anyone?
I suggest you just reiterate the question.
We'll just move on to the next question. How about that? We'll make a fresh new question. I think Pipe did a pretty good job of answering it. So next question is following up with what was just mentioned about data. With DPINs, they're likely to generate vast amounts of data and resource usage and user behavior. On user behavior. Who truly owns and controls this data, and how do we ensure it is ethically used and not just become a commodity for the highest bidder like it is in Web 2 currently?
I can jump in on that one a little bit. The thing that we've noticed, we do this at Koii, obviously, right? So there's a variety of these applications built on Koii that are now doing types of data mining. And what we're doing in those cases is mostly building like large language models or AI data sets. And what we've created so far is sort of a DAO-like structure where the group of users who creates the data set has some ownership of it. But in fact, most of that has less to do with kind of assetizing it on chain. Like, it's not as important to have it registered as an NFT and tradable, but more like who actually has a copy of the information and who can transfer it. And so what we've been able to do is to shard the information across enough nodes that the node operators who are holding a copy of it actually are in control. And if you have these encrypted shards, then if you want the full data set, you have to be friends with enough of these nodes, which means all of them have to be playing fairly. So it creates this sort of two-sided incentive marketplace that keeps everything accountable, which seems to work pretty well so far. But happy to hear other interesting ideas outside the Koii world.
Interesting. Thank you. Guys, feel free to jump in anytime you feel like it. We can definitely add some dynamic to this conversation. Please feel free to hop on, ask your questions if you had some in mind. And yeah, we can probably move on to the next one if nobody else wants to step in. Or go for it. Go for it. Please go for it. Don't be shy.
Sorry, Please repeat the second question so I can have it. Sorry.
Yeah, no problem. So deep pins are likely to generate vast amounts of data on resource usage and user behavior. Who truly owns and controls this data? And how do we ensure it's used ethically and not just become a commodity for the highest bidder like it is in Web 2 currently?
Okay, sure. So I think putting it on the blockchain on Web3 solves the problem, because it turns the kind of the zero-sum nature of data ownership and control that we currently have with corporations and big tech companies. It turns it into a non-zero-sum game. It breaks down the data ownership and recording and even distribution hierarchy that we currently have, right? So right now, your data is owned by Microsoft and all the others, but just putting it onto blockchain, just putting it onto Web3, you're horizontalizing it. It's not a hierarchy anymore, and you've turned it into a non-zero-sum game where both the corporations, the developers of the technology, and the users that are actually generating the data both share in the value of what's being created, right? So just putting it on Web3 basically solves those problems. It's the blockchain layer that's been the missing piece for kind of having the right ethical controls for the data distribution and ownership and everything else. But once you put it on there, you've pretty much solved the problem, and it's just building on top of it and perfecting it, in my opinion.
And it's just to add in, it's like going back to the Web 2 sort of Internet of Things kind of issue, who owns the data. In Web3, it's a bit more different, as Batsy just alluded to. But I think what's really critical of all of these things, and even when we're talking about the DAO structure, is having a really clear mission, vision, values. Who is going to use that? What is that data for? What is the benefit of that data? And I use the word value, not in terms of pounds, shillings, and pence, or dollars, or whatever. I use it in terms of the impact of that data on the community in which we function and the mission that we have. I mean, these are the critical things. And I think that's what's changing. And I think there are now becoming more and more people actually outside of Web3, just in the real world, who understand the value of community kind of practices. And the more we can communicate these kind of things, I think, to the wider world in a way that makes sense, the more we're going to get adoption of these things. But yeah, certainly in terms of the massive amount of data, we don't want to be in a situation where one or two people or a large corporation is owning that data and manipulating everybody with it. We want to be in a position where it's free and it's out there and it's there for a reason. And again, this new sort of technology, if you like, helps to do that.
Yeah, I agree with you 100%. If we take a look at even the smart devices that we have in our homes, it's interesting because let's be honest, a lot of them are pretty dumb. They're just all kind of like a marketing ploy to sell their product, because the products are only as good as the person that designs them, as well as the data infrastructure that they have behind them. And if you look at the scheme of things, you've got Google that has tons of good things. I think I heard somebody say Alexa, tell Alexa to turn off. Those two don't really mesh together. And it's interesting, like you just mentioned, that instead of having two or three major organizations that own your data, that are not willing to really share it, that is definitely hindering a lot of even just Web 2 products from being smart and reaching its full capacity of what it can do in that terms, because a lot of people don't realize that it takes a massive amount of data to basically start building in some of these interesting kind of functions and features that these products could do. And a lot of them just lack it. And so they look for third-party data structure to kind of bring in. And it's kind of interesting as we kind of merge towards Web3, what that looks like in terms of users owning their data, AI being introduced into this whole scheme of things. It's interesting how the data should be used in ethically as well. So, that kind of leads me to my next question is with AI and the different models that are being used out there, are we losing control over oversight and ethical consequences of using AI, especially when it's AI data driven, to optimize games, to optimize current deep end projects, things like that? What's your guys' thoughts and feelings on that?
If no one else wants to go first, I'll go ahead.
Go for it.
Yeah, sure. So I think, with AI, I think there is a concept about kind of the AI data bias. So it's less about the AI in and of itself and more about the actual data that's being used to train the AI. So the data set itself could be biased in a certain way. And if you then use that data set to train your LLM, your language learning model for the uninitiated, that then impacts what the AI does, whether it's on Web3 or not. So I'd be more interested in actually using blockchain and smart contracts to actually sift through the data and actually, clean the data, cleanse the data before it's then trained by the LLM and then used for Web 2 or Web 3, right? So one of the benefits of blockchain-based databases is that rather than it being full of noise, like the internet, if you're trying to do Google searches, all kinds of different data about all kinds of stuff, it's not really specific to what you want. Whereas a blockchain-based database is much smaller, but it's much more niche, and it actually reduces the search costs for what you're looking for, right? So if you have relating to answer the question, relating it back to AI and that kind of stuff, I would have a smart contract based platform which helps to kind of sift through and make sure that the data is as unbiased as possible, so that when it then goes to the AI to be for training or whatever, it's much more robust, or the AI is being applied more fairly, if that makes sense. So use smart contracts, use blockchain to help to sift through the data set and make sure the data set is as unbiased and is as clean as possible.
No, that sounds. I like that. What kind of projects out there besides your guys' self? What kind of projects out there are you guys seeing that you are seeing that are doing it right? Maybe some use cases of things that projects could potentially leverage in this next bull market.
So in terms of AI and AI data cleansing?
AI, DePIN, whatever you guys are seeing that's kind of connecting that bridge between real world and infrastructure and kind of the Web3 crossover.
Okay, I'll give you an example. Demo. My mom actually has a Demo. It's so it comes with a hardware device. You plug it into your car and it feeds back engine data, performance data, which I would imagine the Demo company sells, right? They sell on or monetize, or you probably use the Demo token to then buy that data. So you've created a data marketplace, but it's user generated. So I think Demo is an interesting project, and I think one of these DePIN projects like Demo will become a household name. Everyone will have a Demo one day, because people that drive every day and they want to make money from the engine data. Another example is Hivemapper, another DePIN project. It's like Google Maps but Web3. But rather than the Google trucks driving around, spying on you, whatever, you are the truck, which is capturing the mapping data, and you get paid for it. So it's more a case of, okay, people don't mind having their data mined as long as they consented and they get value from it. So I think those are two projects that I think are pretty interesting and that are more on the B2C, business to consumer angle. And I think the business to consumer angle, I think that's what's really going to make DeepIn pop off, and that's probably where we're going to get one of the next killer apps in Web3. So another example of where these projects would be useful is in the global south, Africa, Asia, South America, where people who are using Hivemapper or using Demo, making a few $100 or whatever just from driving your car, that makes a hell of a lot of difference, in countries where the banking infrastructure is not great, the economy is not great. So I think those kind of projects in the global south, in the countries that I just mentioned, I think that's where you'll see the mass adoption and the disruption, because they need it, quite frankly.
I think DeepIn in particular fits into the narrative that Batsy and I have been talking about in terms of DAOs and the benefit, long-term value of DAO. A good example, Batsy, would actually be how we talked about water companies. There's a water company in the UK called Thames Water, the biggest in the UK, that's currently potentially going out of business. When they were privatised back in the 80s, 90s, they had zero debt and were making money. Privatisation has led them to have around £80 billion worth of debt, and they've invested nothing in infrastructure, and all of that money has been paid out in dividends. So basically, it's been stolen. All the money's been stolen by shareholders. That's the way the world works. What we're left with, however, is a company that no longer has quality infrastructure, leaks all over the place, wastewater going into the rivers and the seas, and a significant amount of money that needs to be invested in infrastructure. Now, actually, if that company fails and was available to buy for £1, it'd be very easy to create. Well, it wouldn't be easy, don't get me wrong. It would be difficult, but you could create a DAO around that with a DeepIn attitude, which said, okay, all the bill holders now own the company. Because you're a bill payer, you own the company. You own a token in the business, and we're going to leverage the existing infrastructure and refinance the company based on that infrastructure, and we're going to invest in that infrastructure. And basically, bill payers become the DAO holders. The money that they pay into their water bill goes directly into evolving the infrastructure, making it better, cleaning the rivers, cleaning the system. And at the end of that cycle, which might take 10 years, bill payers will have only paid what they normally pay, but all of that money has gone into the business infrastructure. And after that point, all of a sudden you've got all of these stakeholders that have got clean water, clean rivers, clean seas, world-class infrastructure, and low bills. And that, to me, is where these things can really be successful. But that's a large project. I get it. We have to start in the thin end of the wedge. But I think some of the stuff that we're doing around Pipe with real-world assets, particularly around innovation, R&D, and IP, fits that model quite well. And we've looked at sort of funding IP as one extra string to the bow, if you like, using things like hydraulic. But actually, once something's built out and has got infrastructure, DeepIn comes into play. So as these things evolve and become real-world assets in their own right, there's lots of things that you can do, which is sort of creative accounting, but it's honest creative accounting because it's based on what the community are doing and it's owned by the community, and it's not just somebody trying to steal the profits. I hope that all makes sense, by the way.
Yeah, 100% it does. Yeah, it's interesting the infrastructure portion of it. It's really interesting because I think a lot of businesses already use blockchain, especially in the healthcare sectors and a few industries like that. But I think that there's a lot of businesses that don't really realize that they could have that instant infrastructure in place if they were to move over to the blockchain, utilizing some of these, we'll call them pioneers, that are kind of building out for similar industry infrastructure currently, like logistics is a huge one, right? Being able to tap into that. is another big one. But yeah, thanks for definitely sharing. Before we move on to the next question that I have, if our community has any questions for our panelists, please make sure that you drop those in the thread below. So we'll have Sam kind of watch for those and bring them up for our panelists to answer here in just a few minutes. So again, if you have a question, just drop it below. Appreciate it. So
Can I just interrupt real quick?
Yeah, go for it.
I was just wondering why Mascot is so quiet tonight. Spirit Swap is like having a nap. Where are you? We would like to hear from you as well. Last time you were in our spaces, it was really, really great to hear what you had to say. So
No pressure. No pressure.
Yeah, no pressure at all. Zero.
Do we have to implement the hot potato rule on here? Yeah.
I know, definitely. Maybe stepped away for a second or something. We'll come back. I'll send him recording afterwards.
No, that's
okay.
awesome.
Let's move on.
No, that's great. So just kind of as a follow-up question to that, how do you guys see gamification or gamifying participation coming into the DPEN infrastructure world?
That's an interesting one because, sorry, someone else want to go first? Sorry.
No. Sorry, I just was about to say something as soon as you did that. But I think, honestly, I don't want to be critical of the question, but I think one of the risks that we have generally is that we can jump too far forward with what we think the features that we need to develop within the systems before we've actually got the foundations truly evolved and developed and understood. So I think gamification generally is great for onboarding and usability, UI, UX kind of stuff, and getting people engaged. But I don't see it as a foundational block. I see it as one of those incentive things that you would do once you've proven principles and things are actually ticking along and going well. It makes life easier once you can gamify these things, but I don't see it as, a critical first step.
That's great insight.
And just to kind of add my 2 cents, as we say in Web3, I think DPEN is already gamifying. DPEN just brings gamification to what you're already doing because you're rewarded for it with tokens already. So like, again, Demo, you're gamifying your everyday driving, right? And you're earning rewards for it. And you're also encouraging other people to do that. So your everyday activity becomes gamified using Web3, DPEN, and tokenization, right? So DPEN and Web3 gamify what's already happening in the real world, or you can gamify what's already happening in the quote unquote real world using D. So what's it called? Was it STEPN? I don't know what happened to them, but they had their pump or whatever. That was just gamifying jogging. You're already jogging, but you've gamified it by rewarding people and giving them tokens and creating a narrative around it. So yeah, DPEN gamifies already.
Yeah, I agree with you on there. It's interesting because if you look at the landscape and the cognitive behavior of most crypto users, they definitely are looking for those instant gratification type of gamification type of things that they can get behind. But I definitely agree that it's not imperative. It's imperative for us to get that infrastructure in place. Which kind of leads me to my next question is this, like with many of the DPENs basically starting to make their way into Web3, obviously they have a variety of different blockchains that they can choose from. And with DPENs, going on to different blockchains, how can projects ensure seamless cross-chain communication for shared resources? Is it more of a collaboration type play? Is it more of technology? I mean, do DPNs want to kind of communicate and collaborate with other projects? What's your guys' thoughts on that?
I would say definitely you want to collaborate. I mean, I was going to say earlier, I see where we are now, similar to the early days of search, you know, and by that I mean we are sort of in the long tail. We are lots of small, relatively small projects doing things in this space. They're all sort of related to some extent in some way, shape, or form, whether it's just in terms of wanting to be in the Web3 space, wanting to tokenize real world, whatever it might be. But there's lots of us, and we're all doing different parts of the equation to some extent, or complementary parts, and even competitive parts. But if we can just look at what we're trying to do as being truly, actually revolutionary and game changing, and it is, if we embrace it in the way that it should be embraced. I have no issue whatsoever in engaging with anybody, any partner, any potential competitor, and finding out how we can work together to change the world. And that's really important, because the way that things have been done and continue to be done in the mainstream, we can't carry on doing that. We know we can't carry on doing that. The whole financial sector is completely broken. And it's down to us, no matter how big or small that we are, to make those changes. And the only way we're going to do that is through partnering. And if there's any model that really works exceptionally well in terms of that kind of relationship, it is actually the cooperative, which we would call the DAO. And as long as you frame that properly and you've got a very clear mission, visions, values, and people, good governance, strong processes, I don't see it failing. I really don't. We've just got to make sure we keep our eyes out for the bad actors and get them out of the system as quickly as possible, and embarrass them and publicly get them shamed. I'm sorry, but that's the way I see it. So that we can have a really clean, revolutionary system, and that's how I see it. That might be idealistic, and as a 57-year-old bloke who's run plenty of businesses, some good, some bad, and some indifferent, it may sound naive, but it's not. I honestly think we're on the cusp of that kind of revolution. It's my opinion.
So that's how old you are. Okay, great. Thanks.
I know I don't look it, Betsy.
No, of course not. I'm 39, by the way, just for the record. So.
Oh, I'm in your club almost.
Yeah, you're making me feel old.
I've got 4 years to go to catch up with you. But guys, actually, yeah, it looks like it's a project spotlight. This AMA turned into. Maybe it's a Twitter lag, or some recent bugs are taking all our speakers away. But yeah, it's only you and us now, so we can get intimate about your protocol.
I was about to ask if I can chill and plug now. Thank you for saving me the shame.
Green light.
No, yeah, go for it. You guys can go for it.
Okay, I'm now allowed to shill. Excellent. So just to add on to what just to answer the initial question, I think what Web3 allows, because it horizontalizes, it makes everything flat. It actually makes collaboration and integrations between projects a lot easier. Sometimes you don't even need to ask the project for permission. You can just hook into their contract, and you can build businesses and products and services on top of it. Right. So I think a good example is when Uniswap bought X2Y2, I think, which is the NFT aggregator. Right. But that NFT aggregator is already hooked into OpenSea and all the other marketplaces. Do you see what I mean? So I think Web3 deepen, if you put your things on a public ledger, especially if it's permissionless, like Ethereum or whatever, then anyone can integrate into your project, like I said, without even asking, and they can still create value on top of what you've built, right? So they're not siphoning off what you've got. They're just using what you've built to enhance what they've got. And I think that's the real beauty of Web3, that you can have these integrations without it being behind a paywall wall or behind some walled garden database. So yeah, to answer that question, I think Web3. But I think the key thing is to put your project on a public ledger rather than a private ledger. Make the data publicly available, and if you can, also make access permissionless as well. I think most of the Web2, Web3 dApps are already that way inclined. Now I can shill.
Yeah, okay. Go for it.
Okay, so the Pipe GDAO, we are launching our mainnet on Monday the 15th, and it is basically a real-world impact Web3 launchpad. Okay, what does that mean? So the Pipe company, their clients are university technology transfer offices who have all kinds of cool inventions, but they never see the light of day because of the current VC funding models. And so what we're saying is, okay, we're going to crowdsource the capital that these real-world impact projects that could cure cancer, that could revolutionize the electronic vehicle industry, so on and so forth. We're going to crowdsource that capital to launch them to market. Getting in the first 2 million in seed funding directly from retail Web3 users. So rather than you being an HNI or a whale, an accredited investor who gets access to these private equity early stage impact opportunities, we're saying, you know what, no. That a Web3 retail investor can put in £10, $100, whatever it is, and they can still get ROI from that. So we're launching, as I said, a week on Monday. It is an NFT-based membership as well. So when you deposit money in there, you're going to get your membership NFT, and that's what gives you access to the platform. And we just take a one-off fee for deposits, but we don't take any other fees. So we're not trying to bleed the system. Once you put the money in, the fee is taken, and then it's then sent to the Pipe platform, and that's then invested into these real-world impact university projects, through this QED process. So the GDAO is the funding mechanism, and this is the community-driven funding rather than VC and centralized funding, basically. So please follow us, join our Discord. Make sure you become a beta tester, because we currently have a beta happening right now. And the beta testers are going to get the biggest early adopter rewards. I think you know what I mean by early adopter rewards, without me saying that. So yeah, follow us and get involved.
That's awesome. That's really cool. I love working with projects that are trying to make a real impact, not only in Web3, but in the world, to make it a better place for everybody as well. Just a couple of quick follow-up questions for you on your guys' project is, can you give the listeners some insight on projects that are going to be initially launching with you guys as well? Or are you going to kind of hold off on people launching with you just so that you can launch your DAO? Like when can people start seeing what projects will be launching on you?
Well, you can see that right now.
I can answer that. I can answer that actually.
Go ahead, please,
if you don't mind. There's projects coming on already. There are projects there now, but we are engaged with 40 universities around Europe so far. A couple in the States and some further afield. There's a lot of interest in what we're proposing because the universities love the idea of a community-based group of people that are helping to not only follow the QED process and the platform in terms of producing due diligence and bringing expertise to bear, because stakeholders in the system, i.e. people who own or get involved in the PGF and the DAO, and they can also see the projects as they come in. They can, if they've got skills where they can apply their expertise to projects, they can get involved in looking at projects and carrying out the due diligence with us as a community. We also do that on the platform. But the kind of projects that we're currently seeing are projects around EVs. So there's a piece of technology on there which is designed to increase the range of EVs by 70% and reducing the weight of the EV and the number of batteries. It's a new process, a chemical process that sits within the same infrastructure, charges in the same way, those kind of things. We've got some medical products that are coming through to do with DNA, particularly for teeth decay. So when you're a baby and you lose your baby tooth, the tooth can go off to this particular firm. They store the DNA from that. So if you later in life lose a tooth, they can grow a tooth for you and that kind of thing. So there's all sorts of things that are coming through. Most of them are commercial, environmental, societal impact, some mental health projects. I was talking to us the other day about what they call a brain on a chip, which is a project to help cure schizophrenia. Now, the reason these projects don't get invested in by VCs, just so you know, is not because they're no good. It's because VCs don't get involved in very early stage projects. They wait for projects to get to a point where they're almost perfectly formed, and then they invest in those projects. But those projects still lose 90% of the time. So only 10% of those projects that VCs are interested in actually make any money. And that's because of the way VCs approach these things as a money reward mechanism. They look to find projects that produce 100, 200, 300 times ROI. We don't do that. We work with projects that are going to produce 3, 4, 5, 6, 10, 20, 100, 200. We're not interested in that particularly, as long as they are viable, make sense, solve a problem, have real world impact. And that's what we're all about. And 83% of these projects that are well funded by universities, charities, and the taxpayer are never brought to the market. They're never seen. And it's primarily because the universities themselves can't deal with them. They don't understand them. These are very technically challenging projects, and our platform, which has got an AI built into it and systems and processes built into it, has been designed to manage that process in a semi-automatic way, so we can see more projects, speed them up, get them through the system, and get them in front of people who can invest in them and make a return on them and actually solve real world problems. And that's what's really exciting about this project, is some of the things that we see that are going to solve massive issues that we all face. They're just exciting, and that's what gives me a thrill. Not making a ton of money off it. Actually, what really gives me a thrill is solving a huge problem. And I think we'd all love to be involved in projects that, solve those kind of environmental issues and poverty issues, and mental health issues, and so on. And that's what we're in it for.
Yeah, it is. It is definitely exciting what you guys are doing there. No question. So follow-up question is, for our listeners, when it comes to VCs, they have a pretty vigorous way about going out and vetting a lot of the projects that they invest in. With you guys being a DAO, can you kind of walk us through that process of how projects get onto your guys' launch pad? Is it a kind of a self onboard, or do you guys have a team that will vet them in representation for the DAO, present it to them for voting? Kind of walk us through that, because I think that there's been a lot of we'll call it medical fraud that's been out there. People have claimed to have these different miracle things to happen, and all it is just a cash grab type of thing. We won't mention names of a certain female that was in the U.S., but I think you know where I'm going with that.
Yeah. Well, I'm not Elizabeth Holmes. The way that it works is that the platform itself, the Pipe platform itself, it was based off of a manual methodology that I invented or developed back in 2012. So it's a long time ago. But essentially, this is what happens. A university says, that's a really good idea, we're going to disclose a project. So what they then do is their researcher goes to our Web2 platform and they disclose their project. And they do that by filling in some online forms and so on, answering a bunch of questions and providing their academic papers and all of their research stuff to the platform. And they do that in a confidential way. And once they've done that, and they tick a box to say, yes, I'm happy for you to validate it, that project then becomes live on our Web2 platform. When it's live, our AI reads it, analyzes it, and then creates an overview of it, which is a short form with an image that's created by AI, a set of keywords that are created by the AI, and that then goes over to the Launchpad. The main bulk of the project is then matched with people we call Pipe Associate members, or in the Pipe Associate network, And these are people from all walks of life who are experts in their field. And they come along and they say, oh, there's a new project that meets my needs, it matches my capabilities. I'm now going to go into the platform and have a look at this new project. And they can look at it and say, yeah, I like that, I don't like this, I think that's right, I think this is wrong, that works, it doesn't work, whatever. And there's a number of associates that will carry out that exercise. What sort of happens as part of that exercise is that begins to build what we call momentum around a project. So there's people who are interested in it, people who want to invest in it, people who can analyze it. And this is all about validating the project. So if the project is disclosed and it is subsequently validated, there's a report that comes out of our platform automatically, again, it's AI driven, that goes back to the researcher that basically says one of three things. This is a great project, you should go forward with it. This is not a very good project, you shouldn't go forward with it. Or we think you need to rework a few areas, and it breaks out the things that work, the things that don't work, etc., etc. So assuming that something goes through disclosure and validation and it's broadly accepted by the system and the people that are in the system, it then goes into another phase, which is called evaluation. There's a formal evaluation of the project then, which includes market research, working out the value, the direction of travel, how it's going to be commercialized, what needs to be done, what the steps are, and all of that kind of thing. That's all done on the Web2 side. Once you get past evaluation, you can then go to launch. At the launch point, the system has built, because of all the Q&A that goes on within the QED system, we've built a business plan around the project. We've built a group of people that are interested in the project, want to get involved in it going forward. They can form part of the board or the management team and help to deliver the project from all walks of life and all backgrounds. Some of them have come from the Web3 side, some from the Web2 side, but they basically form a community around the project. And at that point, the project leaves the Web2 platform and goes to a completely independent investment group. And they look at it and they say, yeah, this meets all the criteria. We're now going to put it back over the fence. And it goes onto the Web3 platform. Or it's then visible by everybody who owns a stake in the ecosystem. And it is held for 30 days. That then allows all of the GDAO members to look at these things and poke them and drill down into them and all of that kind of stuff. And again, raise any red flags, raise any markers. And if everybody's happy with it, it then gets approved for funding and it starts to get funding. And the funding comes in tranches. So the funding drops in small amounts to allow the founding team to build out what they've said they're going to build out. The various tranches of money only get dropped into the project when the founding team have completed a particular piece of work. So it means that we're not spending loads of money on projects early doors. We're getting them through to minimum viable product, proof of concept, and all that kind of thing. And that's how it works. And the project is then listed on the Pipe Exchange. So you can see that it's being funded. You can see that it's progressing. And then if they need to raise another round, an A round, a B round, a C round, they can do that through the Pipe Exchange, which again is the preserve of the Web3 community. They can form sub-DAOs, little DAOs to follow on this money, raise larger sums for particular projects that show really good potential to become a unicorn or something like that. So the whole ownership pattern from the very beginning all the way through to a IPO can be managed on the platform by the community. But yeah, the real answer to the question is there is a process, there is a methodology. It's hard-coded on the Web2 side. There are people that apply their skills and resources to carrying out due diligence, and there is open processes at the end that allow the community to say, no, I'm not going to invest in that because one of our members has raised a red flag. So if we get it wrong, the DAO pick it up, and if we all get it right, then everybody benefits. So it's very rigorous. And I'm more than happy to run people through the platform at any time as a demo if they want to see how it works. That's not a problem.
Yes, join our Discord and we're happy to answer any of your questions.
How good. How good. Proper spotlight.
Also, sorry to cut. I have put a video. We've actually made a video which explains some of the projects that are on the Launchpad already. So if you just look in the thread, you'll actually see this wonderful video made by Wayne, who is one of our DAO contributors, and he's also in the panel. And just to add on to what Rob was saying, if you don't mind.
Go for it.
Okay. So there is, the Pipe is a hybrid project hybrid ecosystem. So there's the Web 2 side and the Web 3 side. And we have what's called the Pipe Associate Network, which is basically a Web 2 DAO, right? So anyone can join the Pipe Associate Network, and if you have the relevant skills, you can actually look at the projects, you actually look at the IP, right? So you can actually sign an NDA and look at the intellectual property, and you can evaluate and participate in the project, and you can earn actual shares in the project. So for example, if you're a Web3 person, you have invested in the Launchpad, which is a basket investment, so it invests across all of the eligible projects. So we're not picking winners like venture capitalists. Oh, sorry, I meant venture capitalists. So okay, you've invested. You're like, you know what? I want to actually get involved and take a closer look. You can press the Get Involved button. You can join the Pipe Associate Network, and you can actually play a role in evaluating the projects. And to answer your question about where do the university deals come from, so we have business development and networking happening on which the Pipe Web 2 company does, but a Web 3 user, if you know a university technology transfer office, and you refer them to the Pipe platform, and they become a client and start putting projects on it, then you will get tokens for that. We will reward you in tokens, quite a lot of tokens for doing that. So we want to use the Web3 community to not just be Pipe associates, to actually get involved, to not just be investors, but we want them to be Pipe associates to actually evaluate and participate and even join the board of some of these companies, and also refer the university technology transfer clients to us. So that's how we aim to gamify the ecosystem and incentivize those kind of behaviors. So I hope that answers that question.
Yeah, and again, sorry, we are disintermediating the VC networks for sure, and also the IPO through the NASDAQ name and that kind of thing. That's all disintermediation. But actually, some of these VCs are re-intermediating with us. So I had a conversation this morning, and I can't tell you who it is, but it's one of the largest VCs in Europe who contacted me off the back of a conversation we've been having through social media. And they broadly agreed that what they're going to start doing is giving us the projects that they cannot get through due diligence because they don't know how to. Because they will only focus on projects that they can look at that will produce 200 to 300 times ROI. And that's because 90% of the projects that VCs invest in fail. This is true for high net worth individuals, angels, and VCs. So they can't look at everything in depth. Because we have a system and a platform and a network and a community, we can. So they're going to start giving us the projects that they can't action because they don't understand them. They might be deep tech, they might be things not in their area of expertise. But this is a significant step in a different direction where a large VC, well known, is going to start re-intermediating into the Web3 space.
No, this is great, guys. Appreciate you taking a few extra minutes to basically tell us about your amazing project. And it's interesting, as we are talking to a lot of different projects about coming on board with our Layer 1. It is interesting to hear projects like yourself that are very, very passionate about what they're currently doing. And we can definitely tell that you guys are passionate about what you guys are doing. And I encourage every listener that's out there to basically give these guys a follow and to definitely look into their projects, because it is something that is interesting, and it definitely sounds like they've tried to cover all the different angles in terms of protecting your initial investment type of thing. So looks like you guys have your hand raised real quick. Did you have one last thing you wanted to say?
Yeah, sure. And the reason why we're kind of partnering with looking at partnering with Layer 1X is because we are launching multi-chain, right? So we are launching on 8 EVM blockchains, including Ethereum. Ethereum will come last, quite simply because we don't want to pay the gas straight up and down, and we want to use some of the money we've raised from the other chains to pay for the ETH gas, right? Basically, that's why we can't launch it all at the same time. But we'll be launching on Arbitrum, Optimism, Blast, Polygon, Avalanche, Binance Smart Chain, Ethereum, and Base. That was the 8th one. And the reason why we want to work with Layer 0x is because they get it. It's Web3 is multi-chain, it's cross-chain, and if you want to get the biggest payout from a game theory perspective, you need to be on as many chains as you can to capture value. And the interoperability of what Layer 1x offers. So right now users don't have to bridge to a different network to use the Launchpad because we're already there. But what Layer 1x is potentially offering is that users can actually use their NFT assets on different blockchains, or if they want to move over to Ethereum or somewhere else to make the deposit or whatever, they can do that within our product without having to use a third-party bridge and without actually having to bridge anything. Right, and I think that is very, very interesting because it just adds the interoperability, cross-chain liquidity aspect directly onto the product, so that actually you won't have to bridge if you do want to use another network that you currently are not on at the moment. So yeah, this is what we find exciting about Layer 1x.
100%. And what makes us really excited is as you're bringing these projects on, and it's definitely going to be an opportunity to kind of open your guys' world as well as other projects' world into getting listed on Pipe as well. So yeah, we're definitely looking forward to collaboration on that end for sure. So we're about 20 minutes over our time, but I wanted to thank Pipe for sticking around and kind of walking us through a detailed explanation of their projects. So loved having them on today. Appreciate your guys' participation. But again, please make sure that you guys go in and give these guys a follow and definitely look up their project. And if it's a right fit for you, definitely give them a follow and see if it's going to fit into your financials kind of investment strategy. So best of luck to them, and thanks for joining us today. We appreciate you guys tuning in. Be sure to tune in. I believe tomorrow's our next one that we have. It's going to be another good one, and we'll talk with you guys tomorrow. Thanks for joining.
Thanks for having us. Much appreciated.
Thank you so much, everyone. You guys.
Bye-bye.
Have a great one.
Thanks. Bye-bye.
Bye.